Today I want to present Moneta Porcupine Mines. We're a Canada-based company, Ontario focused, and we're listed on the main board, the TSX, under the ticker ME. We also have a listing on the OTCQX and within the German exchanges. Today I want to present our main project, which is located in the Timmins camp. We're in the process of putting together what is a major gold project. It's one of North America's largest undeveloped gold projects, and it's a growing project. And I just wish everyone to follow the slides as we go through the development of the project, our plans, and the current program.
Gary, sorry to interrupt. Mark here again. I know you're a much better looking human than I am. I was just wondering if you'd mind turning your camera on for the presentation. Thank you so much.
Sorry for that. Thank you. Just do want to point out there are forward-looking statements in this presentation. So Moneta Porcupine Mines is very much focused on the Timmins camp. The focus is gold, and Timmins is, of course, Canada's largest, most prolific gold mining camp. And we as a junior company have consolidated a major land holding in the camp. We updated our resource late last year and combined put together 5.5 total million ounces. Earlier this year, we completed an acquisition of the adjacent Garrison project from O3 Mining. That took us to a total of 8.4 million ounces, of which there are 4 million ounces indicated and 4.4 million ounces inferred. Both ourselves and O3 Mining completed PEAs on 2 of the deposit areas last year. These were done independently before the project was consolidated. We completed a very solid PEA on the Southwest underground gold resource, and O3 Mining completed a very solid PEA with very robust economics on the Garrison open pit resource. We've now combined those into one project, and we're talking about a much larger, significantly increased scope and what will be significantly increased production profile. This is now one of the largest undeveloped gold projects in North America. We made a number of new discoveries last year. We're back in there now drilling out these, looking to expand the resource base that we'll be subjecting to further studies, as we move the project forward. We do have significant regional scale exploration potential. We are drilling that, and we're in the middle of a 70,000 meter drill program at the moment. The Tower Gold project occurs 100 kilometers to the east of Timmins. Timmins is the sort of a main center, a large city with excellent infrastructure, good skilled workforce. This is very much a gold mining camp. It's Canada's largest gold mining camp. Over 85 million ounces have been produced in the camp over the last 100 years. Great jurisdiction, good, safe investment placed jurisdiction with excellent infrastructure. Just want to point out that we sit on what is called the Destor-Porcupine Fault Zone. It's a major suture in the Archean terrain in the area, and it's along this main suture and fault zone that all of the gold mines occur on second-order structures. There are really only 2 northeast strongly dilational structures in the area. One is in Timmins, where there's probably 80 of the 85 million ounces have been produced. The second north-northeast dilational jog is the jog that we control and are currently building up a very large resource base on. Looking in and a blow up onto the actual project itself. This is Highway 101, major regional highway, sealed highway. Along here, there's all the infrastructure, electricity, and other requirements required for developing the project. This is the old Golden Highway project. There was 5.5 million ounces there as of December last year. 2.8 million ounces underground, 2.7 million ounces open pit. Garrison occurs just immediately to the northeast, 5 kilometers away, 2.9 million ounces in open pits. Many of these are open. We have recently put out press releases that have showed the strike extent to the east of Windjammer South here to the east. The new discovery last year, Westaway underground resource, 600,000 ounces. We've been drilling out the extensions of that, and we are now currently drilling out the extensions of the other open pits. Windjammer South, what will be an open pit at Southwest, and the 55 zone. We also see upside potential in and around the Garrison project, which we'll be testing later this year. And we're looking to consolidate ground in the project as well. So we're looking to move this forward, consolidate, expand, and grow the resource base this year. Looking at the geology of the camp, again, this is the Highway 101. Remember, these deposits occur immediately adjacent to a major regional highway. This is the Golden Highway camp. All the deposits occur within, well, most of the deposits occur within a large Temiskaming basin here. It's an accretionary basin through which a major banded iron formation sequence occurs. That same sequence occurs again up in the Garrison Belt, and again within the same predominantly Temiskaming age sedimentary basin within the Garrison project. These occur along splays of the Destor Porcupine fault zone. The mineralization occurs in dominantly extensional veins occurring peripheral to these splays of the Destor Porcupine fault. We currently have just over 550 million shares outstanding. Our share price today actually is just over 40 cents. Our share price today is our market cap today is just over 200 million. We have 25 million in cash, no debt. We have good analyst coverage. We have 4 very well-respected analysts from the street who are covering us, all with very good target prices, everywhere from 70 to 80 cents. We have great institutional ownership. Many of the big gold funds in North America own a significant portion of Moneta Porcupine, and they've continued to support us and fund the company over the last 2 years, and they see the direction we're going and they see where we want to take this company in the future. Very strong board, a great diverse skill set to cover all of the challenges ahead, developing such a large project as we move forward. Lots of experience here, discovering, developing, operating, and selling projects. Looking at a long section along the belt. This is about 4 kilometers here at Golden Highway. Remember, 5.5 million ounces here. 4 kilometers here at Garrison, 2.9 million ounces here. I will point out that there are currently no underground resources at Garrison. So this mineralization you see below the pits is just that. It's mineralization that has not been captured in a resource update. We see the potential to expand the smaller pits to the east, as well as capture some underground resources, and that will form part of our drill program this year. At Golden Highway, we've been drilling out the expansion here at Westaway. This is the new discovery from last year, underground resource. We have been drilling out the extensions of the 55 pit as well, into pit infill drilling. We're currently drilling out and connecting the Windjammer South open pit. Remember, there's 2.1 million ounces here at Windjammer South. We're looking to expand this out to the east. We put a press release out about 6 weeks ago that showed 700 to 800 meters strike extent potential here with good mineralization east of Windjammer South. We are also looking to connect the Windjammer South to connect and capture the near surface low grade mineralization here at Southwest. So we're looking at significant resource expansion potential at Windjammer South. Underground resource expansion here at Westaway, and open pit resource in here at 55. So lots of ounces to be added. On the project, we have a very good working relationship with the Waagashig First Nations. We expanded our exploration agreement to cover the recently acquired O3 ground under the same exploration agreement. We have a number of contracts with them. We have and they provide a number of services and work with us in the development of this project. We're well underway on our environmental baseline studies. We are continuing to complete these surveys, conduct these surveys, and look to have the project in a very good standing when it comes time for permitting and moving the project forward through the feasibility into development stage. This year is really about adding resources. It's about expanding and finding the total sort of resource endowment for the project. This is a map showing a map view of the previous slide. This is showing where we're currently focused and where we're looking to add ounces. Here at 55, both within the pit and pit extensions, underground resources at Westaway. This is the new discovery from last year. So 600,000 ounces last year in a new underground resource. We're now drilling out the extensions of that deposit. We've connected Windjammer South to the southwest, and we'll be looking to push the open pit here to the west. And as mentioned, we put a press release out. We're now drilling out to connect the significant mineralization we found here east of Windjammer South. So 700 to 800 meters to the east, plus filling the pit to the north, the south, At Garrison, the adjacent Garrison deposit, remember it's only 5 kilometers away. We see the potential to add this underground, currently unclassified mineralization into a resource category, as well as test the open pit potential here to the east of the current main pits. The current resource table, as it stands and was updated in December last year, it looks like this. At Southwest, we will be looking to expand and add an open pit resource, where we will be looking to drill out the extensions of Windjammer South. We're currently doing that. West away, we've been testing the extensions of the underground resource. 55, we are targeting open pit extensions and infill drilling, and we're looking to add the new halfway deposit here, which will be an open pit resource. We will also be testing the eastern Garcon pits, looking to push those out to the east, as well as drilling out and potentially adding underground resources here as well. So currently 5.6 million ounces open pit, 2.8 million ounces underground, all of which we're looking to expand and grow this year. Upon completion of the drill program, we'll be looking to update the PEA. Update the resource and then the PEA. The PEA will look at the previous PEA, which had a combined total of 200,000 ounces. We're looking to significantly increase that, probably more than doubling that. We think with the exploration potential and the new resources we have at hand, we'll significantly be able to support a much higher production profile, probably more than 400,000 ounces a year. We've already shown that the metallurgy is compatible for all the deposits. All of the ore can be treated in one processing plant. By combining the two projects, we see significant capital cost reductions through synergies and not needing to duplicate certain functions. We see the ability to mine and blend high-grade underground ore with open pit ore. That significantly increases the head grade, and thus the size of the plant will be significantly decreased. We see the ability to bring this into production at a significantly lower capital and cost than many of our peer group due to the higher potential head grade. And we see the updated, expanded PEA as having significant valuation upgrade to the project based on a significantly expanded production profile and significantly improved economics. So this will be quite a game changer when we complete the resource later this year, update the PEA, and come out with a new production profile with a significantly increased valuation. And we see that as, the direction the company will be going to, and that's the way we're currently planning the development of the project. Looking at an isometric view down along the camp, we see here the small open pits at Garcon. We have the potential to expand those. We will be drill testing those this year as part of the 70,000 meter program. We see the ability to test and potentially model, include some underground resources at Garrison. There's currently 2.9 million ounces at Garrison, only in open pit resources. We're looking to add underground and additional open pit resources there. Remember, there's a very good starter pit here at Garrison. There's 1 million ounces at a low strip ratio, 2.7 to 1 at over 1 gram per ton, outcropping that can be mined from day one. So we see a very good synergy of adding that and including that in the mine plan going forward. Halfway, we put a press release out 6 weeks ago that shows the potential to expand this significantly to the east. We currently have drills in there at the moment. We have 6 rigs running and a 7th on the way. We will be drilling out the resources here. We've given enough guidance. We've done proof of concept drilling, and we've put that into the market already. We'll now be drilling that, including that this year. We'll also be doing infill drilling in and around the Windjammer South pit, converting a lot of the waste, which is present only due to the lack of drilling. We have been drilling in and around Westaway. Those results will be coming out soon. As soon as we get the assays back, we've been looking to expand the underground resource here. And we've been drilling out the extensions at 55, both in pit to convert waste to ore, as well as expansion drilling. So lots of ounces to be added here, underground, open pit, and looking to significantly expand, the current resource base. Remembering 2.8 million ounces here underground now, 2.7 in open pits, and we see the ability to add a new open pit as well as the southwest open pit and connect that to Windjammer South. So significant resource upside, and which will be added to our, to the project during this year. Looking at two of the recent press releases. The first release at Southwest, this is in the area we call the Gap Zone. So this is the area between Windjammer South and Southwest. It's an area where there's currently no footprint, there's no resource. The drilling was done over 700-meter wide long zone, 200 meters wide. We intersected significant mineralization in an area which previously had not been recognized as being mineralized and had not been drill tested. We are in there now drilling that and looking to connect. The first results showed significant down plunge extensions of the Windjammer South mineralization, as well as significant mineralization near surface and, to the south of Southwest. Remember, Southwest has been modeled as a high-grade underground resource using a 3-gram cutoff. These are steep, high-grade structures. We'll be looking to model a significantly larger, low-grade resource here moving forward using a lower-grade cutoff, similar to what we used at Windjammer South, which was a 0.3 cutoff, and that captured 2.1 million ounces. To the east of Windjammer South, remember, this is the 2.1 million ounce open pit resource. There was historical drilling under the resource that had significant widths above cutoff grade. The pit did not pull to capture these because there was no drilling above or to the east. We've now done proof of concept drilling over 800 meter strike length. This is the recent drilling, which had results up to 75 meters at a gram, 10 meters at 3 grams, which will pull these resources to surface. And we now see the ability to extend this pit significantly to the east. And remember, in the southwest area to the west, we're looking to pull the pit to the west as well. So looking to expand that 2.1 million ounces both to the east and to the west. Looking at our current valuation, this is based, our current market cap versus, the previous 2 small PEAs. Remember, we'll be significantly expanding these, and these will be significantly larger. So we have significant upside for valuation. Trading at our peer group about $75 an ounce. We should really be trading at about $1.60 an ounce. The analysts have been giving guidance here of 70, 80 cents per share. We're currently trading in and around 40 cents. So lots of upside there for our current shareholders as well as new shareholders to benefit from what is a significant resource and a significantly expanding resource in a very safe jurisdiction, in a very infrastructure-rich environment. So lots of benefits in developing a project in the area, low carbon footprint, low and significant capital cost savings. This project has really come together rapidly in the last little while. Really, since December last year, we jumped to 5.5 million ounces. In February, we jumped to 8.4 million total ounces, and we're currently looking to go to a number significantly higher. This will result in significant re-rating and valuation increase for our shareholders. Remembering we have 8.4 million ounces now, 4 million ounces indicated and 4.4 inferred, and we'll be looking to expand those both in the underground and open pit scenarios. We're well underway on a 70,000 meter drill program. There'll be a good news flow through the year. We're waiting on assays at the moment, but as soon as those come in, we'll be putting those out to the market. List of all the work that we'll be doing this year. We have been testing the Westaway underground resource extensions. We're now drilling out the halfway resource. We're expanding the Southwest resource. We will be modeling that as well, where it has been historically already drilled out, and we're connecting it with the Windjammer South resource. The Windjammer South pit, of course, will be expanded to include these resources, as well as adding resources within the pit, which are currently waste due to pit infill drilling. We did show that we were able to expand the Discovery underground resource. We will be doing the in-pit infill, as mentioned, to reduce the strip ratio, increase ounces, and improve the economics. We think we can expand the starter pit at Garcon. We see that as being open. We see the ability to add underground resources at Garrison as well, and we'll be looking to do that as part of this drill program. We will be doing ongoing metallurgical test work to confirm that all of the new deposits and areas of mineralization can be treated in the same conventional processing plant, which has already been, has been shown in the previous studies. We'll complete the resource update, and then a significantly expanded PEA will be conducted upon the resource update with a significantly enlarged scope and thus significantly increased valuation for the project. The milestones, moving forward for Moneta Porcupine Mines and the Tower project, we completed the initial district consolidation with the acquisition of the Garrison project from O3 Mining. We are currently well underway on the drill program. We've finished more than 30,000 meters of the 70,000 meter program. We'll complete the rest of that drilling, and we're flat out on that at the moment. Rigs are turning as we speak. Conduct the metallurgical test work, do the expanded resource update, and combine all of this into a significantly larger PEA. That means rolling next year with a larger PEA in tow. We'll know where we need to do feasibility, pre-feasibility style drilling, where we need to do the studies, and what that program will be. And that's what next year's program will be. Rolling that into a feasibility study, noting that we're already well underway with our environmental baseline, our community engagement, and we're looking to fast track this as we move forward. We have lots of optionality here between open pits, underground resources. Remember, this is a significant new camp over a 17-kilometer strike length, along which we currently have 8.4 million ounces and growing, and we think this will be a major new project for Ontario, for Canada, and for North America. On that note, I think I'll pass it back to the moderator, and if there's any questions.
I appreciate that, Gary. Thank you very much. A terrific presentation, lots of details, always helpful for our viewers. And of course, this brings many questions from around the world. So we'll start to lob a few of these questions your way. And I just want to comment again, seeing that you're a chief geologist as well as CEO, quite a wonderful combination. And that leads me to our first question, because our team at VID Conference does do some heavy research. And I just want to share that since you joined the company in 2017, you and your team have grown mineral resources significantly from about 1.7 million gold ounces to 8.4 million gold ounces today. That's a huge increase. We're curious, how did you accomplish that, and how much larger can you see the resources growing into the future?
Well, it didn't happen over. This is based on, a lot of work over a long period of time. There's been people working on this project for, 20, 25 years. Mm-hmm. There was a large resource developed in the 2011, 12, 13 period. We've used that as our base. We've just applied a little more rigor, some geological constraints, and we've used that as the base for moving forward. We use all the historical drilling core data as well as all the historical knowledge. It really did set us up for where we are today. We did the big drill program last year, but that was based on, 2.5 years of relogging core, assaying core that hadn't been assayed before, and pulling together a new geological model. That came together with a new discovery last year, the Westaway discovery, which we were quite thrilled about. It was a major new discovery, and that ended up cumulatively adding a lot of ounces, all at once. They didn't all happen at once. It was over a period of time.
Right.
They've laid the groundwork now for more significant resource updates. We have the new halfway discovery, so we're drilling that out. Mm-hmm. We're expanding that Westaway deposit. We now see we can push the Windjammer South pit into the southwest area. We're drilling out that gap area now. We'll be doing pit infill drilling. So this is going to get significantly large by the end of this year. And I'd be surprised if it wasn't a double-digit, resource. Remembering that we haven't even drilled out a lot of the underground potential, all of the Garrison area. Significant mineralization there, so we're looking to add some underground resources there. Okay. And we've only drilled out Westaway and southwest within the Golden Highway. There's significant underground potential under the other resources. Remember, this is Archie and Greenstone. Once you get onto mineralization, it tends to go for kilometers, to depth. So this is all upside for any investors going forward. This is, as I kind of pointed out, hinted in that first slide, we've really found another gold camp here. This is Timmins, 2021, let's say. We're going to end up with multiple deposits over the 17-kilometer strike length, I think, over the years to come.
Terrific. Lots of potential there. Thank you, Gary. My understanding is that the company has a 70,000-meter drill program running this year. It's more than double than last year. So what are your promising target areas, and when can we expect a resource update on that?
We're hoping to have the drilling done by the end of the Q3. the current delay is really the assays, and this is a little out of our control. All the laboratories are full with COVID. They've been unable to expand and bring in new people. That's the only, and it's a little out of our control, but we are working with the labs. So if we can, we'll get it out this year. We will have the drilling done. We just hope we can have all those assays back. We've already started modeling some of the zones where we keep trying to keep ahead of where we're at. We're already talking to people about, putting the resource together, the methodology. We're already talking to people about the resultant PEA. We're looking at larger engineering groups to do that, those that have actually built and constructed mines. So we are laying the ground, and we hope to have that resource by the end of the year. If it does slip, I think it'll be out of our control, but we certainly hope not. But we'll keep the market informed, and we'll keep moving forward. Like I say, the drills are running, and cores coming in, being processed, and everything's going well. We just want those assays back and get those out to the market and to our shareholders.
Fair enough. End result. Well, we've certainly touched on potential. Can you tell us a bit about the potential starter pit at Garrison, and potentially how soon you can see cash flowing from that?
Well, that was one of the reasons we acquired the project. It has a very good starter pit. It's outcropping. There has been bulk samples done there. They did ore grade reconciliation earlier in the last decade there. They had good reconciliation, so they confirmed the grade they had. So it's outcropping. So we see that as a really good starter pit. You can be mining ore, processing ore from day one, while we either develop what are our larger open pit resources, which require a certain amount of pre-strip, and also, of course, our higher grade underground resources, which require development, potentially a decline initially rather than a shaft, but developing that. So we currently see the starter pit as the best option, but it may work out that we develop declines before that. You can develop declines during exploration as part of exploration under flow through funding, get underground, drill out those resources underground, and do some test mining to ensure that you can mine them as predicted. And remember, these in the PEA, those were considered to be bulk tonnage underground operations. That's why the great cash cost, the bulk tonnage that came out of those. So it may be a combination of the both, the open pit, starter pit, as well as some higher grade underground earlier in the mine sequence.
Okay, good to know that. Thanks, Gary. Let's turn our focus to cash flow here. Obviously, a key territory in the realm. And how far do you think your treasury will get you along some of the milestones that you've mentioned?
Well, we have 25 million in the bank at the start of this quarter. Anyway, at the end of the last quarter, we are burning through it. We have a lot of rigs running, a lot of geos working, and there's a lot of work going on at the moment. But we're looking to the budget for this year will be to burn through 13 million of that by Q1 next year. So we'll still have about 12 million. We see that as enough to do a similar size drill program to start many of our pre-feasibility studies. Remember that budget I mentioned includes a resource update, includes the metallurgical test work, also includes the PEA. So those are included in this year's budget. So yeah, we're well funded for 2 years really, but we'll look at how the market is, the share price, and use an opportune time to keep ourselves funded.
Fair. Thank you. John asks, Gary, is the new resource estimate expected to be made public in Q1 2022?
Well, we're still hoping to have it out this year. We're hoping to have it 2021. Like, as I mentioned, it's going to come down to the assay turnaround, and the whole industry is having this problem. We're actually getting better turnaround than some of our peers, but the things do change. But if we can get it out this year, we will. And if we don't, we may have to give guidance to the market. But the program's going along fine. The drilling, the processing of the core, and the modeling. It'll just be that one issue with assay turnaround.
Okay, good to know. Thank you very much for that. Next question will be, what does the rest of 2021 have in store for Moneta, and what are the plans for 22? We've talked a bit about cash position, but just overarching and big picture thinking this year compared to next year, can you provide some thoughts on that?
Okay, so last year we did a PEA on our largest underground deposit. O3 Mining did a PEA on the Garrison project. So we had two good, solid, robust PEAs. One was for an underground operation, one was for open pit. We did look at consolidating those and moving forward with that. But due to the exploration success we'd had last year, there was so much low-hanging fruit, so many ounces sitting out there. We knew Southwest had not been modeled near surface. No one had tested, we had not tested the gap between them. We had the discovery at halfway that had not been upgraded to a resource. West away, the large, new underground resource had not been drilled out. Our last drill hole there had a 30-meter wide vein, intercept with 3 grams per ton. It was a big, big meaty piece of resource there.
Sure, yeah.
So we felt to do justice to any updated PEA, we really need to do this next round of drilling. Also the pit infill drilling, to get the strip ratios down, ensure we had maximum ounces within the pits to do the, any economic study justice. That's why we embarked on this program to infill the pits, drill out the resource extensions, add the new resource. Then we have really all the chips on the table, and we'll be able to make the right decisions about a mine plan moving forward and sequencing open pits, underground, the throughput, how large should the project be, how much production profile, do we stockpile the low grade ore, just process high grade ore, which currently looks possible, and get the grade up even higher. So lots of positives here, which will significantly improve the economics. So that's why we went on the, this current big drill program, update the resources, and then address it, a new economic study to the project.
Okay.
But that should lead us then next year into moving the project forward through pre-feasibility, permitting, finalizing things like the economic baseline, or the technical hydrological studies. We'll get into those next year, unless of course we have another round of major discoveries and the project continues to grow. But that's currently the plan. Yeah.
Let's hope. I appreciate that. It's a good short to medium term viewpoint from here. You open the door, and sometimes those great probing questions come in, Gary. And Manel is asking, do you plan to stay explorers or develop your own properties yourselves? Look for a partner, perhaps sell. Curious to know what your long-term strategy and approach is here as a company.
Our plan is to move this forward. It's to develop it, it's to move it forward, to de-risk it. So we are looking to take, and we've already started many of the steps required to put this into production. It has grown significantly, and with the acquisition, of course, that took us to another level in regards to size. But we see it's still the same process we go through, whether it's a small project or a large project. It's the same steps in regards to de-risking. So that's our main focus, is to move it forward and take it through to production. Now we are a public company. So, there is the possibility that, we could be subject to the market and acquisition. So that happens, but we're not looking at that as our prime. We don't have a for sale sign up. We see, with the addition of the right people moving forward and the right team, that we can develop this and move it forward ourselves and add value to our shareholders.
I appreciate that. Thanks for the viewpoint there. Scott is asking, Gary, when can we expect to see the next set of drill results?
Yeah, I'm hoping within the next 2 weeks. I saw 2 batches come in just as I was in the waiting room on the presentation. So
great.
As soon as we get a bunch of enough holes together, we'll get those out. So hopefully within the next 2 weeks. And
fair enough.
And then we should have a good flow after that. They are starting to come in, trickle in a bit. They're starting to flow in a little more steadily now.
Fair enough. Greg is asking, Gary here, can you provide an update on the previously announced 6-1 share consolidation?
That's right. So it's gone to, at the AGM, there'll be a vote on that.
Okay.
The shareholders are currently voting. So we are looking to do that. We've got 550 million shares outstanding now. We're looking to consolidate to about 90 million. That should have our share price around, the $2 mark, so just over. We see that as the sweet spot in regards to having enough liquidity, but also just not being too illiquid. So we've watched we've done a major study on a number of other companies that did a similar thing, and that seems to be the range you need to be in regards to to leveraging your share price without too much dilution. So and also without having enough liquidity. So
I appreciate that.
Sorry,
go ahead.
No, that's fine.
I'm curious when the AGM is held.
So it's due to be held on the 24th of June this year.
Okay, coming up this month. I appreciate that very much. Curious here, Gary, the PEA studies were conducted in 2020 on the Southwest deposit and on the Garrison project, both of which confirmed robust economics and low cash costs. Which open pits and underground mines would you expect to be operating based on that?
Well, the Southwest bulk tonnage underground, its long hole open stoping was what was studied. So it had cash costs of under $600 an ounce. So remember that the average stopes were 8 meters wide. So these were big, wide, stopes. So that's why the cash cost was so low. The cash costs at the Garrison open pit were about $720 per ounce. So combined, we'd be looking at and that was looking about 125,000 ounces a year. From the underground, we were looking about 80,000. So it combined, about 200,000 ounces at sub $700 cash cost. We see that as, good, robust cash costs. And we think by blending the underground and the open pit, we get the grade up. Our capital intensity is significantly less, and we see that starter pit currently as the way forward and that underground resource. But we have Westaway coming in. There's another underground resource. We potentially have Garrison if it models up. We have other open pits, everything from Windjammer South, Halfway, Southwest, 55. They may end up being pulled forward in the sequence, but at this stage, it looks like the Garrison starter pit and potentially the Southwest underground has been the cost drivers, the value drivers, but that will come out in the study early next year.
Truth will come. I appreciate that very much. The questions keep coming in here, Gary. Kevin's asking, do you have a target in mind for your resource, at which point you would shift from an exploration focus to pre-feasibility and production?
Yeah, I don't think there's a magic number that you need. It really comes back to defining all of your resources at this stage that could potentially be in the mine plan and could be in any development option. So you really want to have those on the table. You don't want to develop the project and then later find out you've developed the wrong resources and you find something subsequent. So the idea is look at everything that's near surface, will be in any early years, and get that on the table, optimize your mine plan, look at your best options, and then subject those to more detailed studies, pre-feasibility, feasibility, and that's the way we're looking at it now. So we're really just looking at one more year of exploration drilling, and then we think we'll have the resources that the near surface, close to infrastructure resources initially, and those will form the best mine plan initially. And of course, this project is going to continue to find ounces at depth. As mentioned, we haven't drilled to depth below many of these open pits, but that will be for future resources, for future expansion, and for future development.
Terrific. Thank you for that. Lots to come. Curious, because we had that great opportunity to speak with Pierre Lassonde this morning, and he spoke about his criteria for investment. Of course, the first thing he shared and offered to the audience was, management, people who run the company. So I'd like to provide an opportunity for you to share a little bit about your team and, who are the superstars inside the company, because that's where the vision comes from. We know you're leading a great operation, but can you share a bit about the dream team that we got going on?
That's right. Well, so as you mentioned, it takes it takes a whole village to raise a child, as they say. And so besides myself, we have Jason McIntosh. He's the CFO, corporate secretary. Linda Armstrong runs the IR. Kevin Montgomery's the senior geo. We have Georgia and Randy Salo, who are the Georgie Sporagos and Randy Salo, the project geos. So we've got a very good base in regards to experience. We've got a new field manager, David Justice. So we've got, we're growing the team and expanding the team. We've got a very good base now, lots of experience in the belt, lots of experience actually on the project, and lots of enthusiasm there to move this forward.
Good energy. I appreciate that. Let me just ask just an overarching question here, Gary, about how big do you think this project might be in terms of tons mined and milled per day?
At the moment, and I think we're possibly conservative here, but we're looking at about 8 million ton per annum production. The PEA that was conducted by Ausenco for O3 Mining looked at about 4 million ton per annum. Remember, that was only on the Garrison project. We have significantly more ounces than that, and now an underground and open pit from the Golden Highway portion of the project. We conservatively see, look, we can see the ability to be able to double that, 8 million ton per annum, producing potentially 400,000 ounces a year, combination underground, open pit, and we see that as the base, and we'll see how that, if that changes with the, the PEA as we complete those studies.
Okay, thank you for that. I always like to provide a bit of time. We're winding down our session in a few moments, but just to ask an open door question here, anything else that we haven't touched on, Gary, or things that have come to mind to share with our audience today?
I can see one chat here. Someone's asked about the royalties. So on the Golden Hire project, there are no royalties.
Okay.
For the majority of our ounces, the majority of the new target areas, there are no royalties, no encumbrances. So we own those 100%. Garrison has an average about 1.5% royalties, of which we can buy back just over 0.5%, so under 1%. So there's no great encumbrances on the project, and most of it's free and unencumbered.
Okay, good to know that. Thank you for that. John's offered a question here too, so we'll touch base briefly here to ask, assuming you end up with a 10 million plus ounces resource by 22, will you be looking for a partner to help with turning the resource into a producing mine?
That would be one option. There have been a number of companies that have done that. I think Gold Road's a good example, where they bought in gold fields to develop their project, and they're now a significant gold producer in their own right and significant market cap, and they're out acquiring and exploring other grounds. So there's definitely one option. We'll look at all our options once we have the project on the table, and we'll see the best way to add value to our shareholders moving forward.
I appreciate that. And honestly, there's a lot of hungry questions here because we have the opportunity to chat with you. So James asks, how early can Moneta potentially be in production? It's impressive how many ounces you folks add regularly. Can this be a 20 million ounce mine at some point? Any thoughts or forecasts there?
Look, we could, if we dropped the hammer, after the PEA had a project description, we had all the EIA, done and dusted, you could have this permitted in 18 months. So you're potentially looking 2024, permitted, studied, and maybe finance. I'm not sure on that, but maybe finance. So yeah, you could be looking at that timeline. Remember, this is Timmins, Ontario. There's lots of projects that have been permitted here in the last few years. We're already aware of, what path to take and what needs to be done. We're already addressing a lot of that, and we'll need to address, more as we move forward. But first thing is get that, what's really the project description. I should point out we are deliberately not going near any bodies of water, rivers, so we're not affecting any large or moving water body. That will slow down permitting. So we are aware of what we need to do and what not to do. And
okay, good to know.
We're using the same consultants that many of the successful, projects have used in the area over the years.
I appreciate that very much, Gary. It's been a terrific tour, and always appreciate the insight and the offering that comes from folks like you that run the company. We'll look forward to watching the company and as it moves forward, and look forward to talking to you again, Gary. Thanks for your time today.
Excellent.